Welcome, this is Accounting with Bennett Tchaikovsky. Our topic today is the statement of cash flows. We're going to be going through a simplified example. This presentation is copyright 2008 to 2018 by Bennett Tchaikovsky. All rights are reserved. And if you have any questions, please email me at 1812cpa@gmail.com or bennett1812@gmail.com. So the example we're going to be going through today is for Lasers Inc. And for Lasers Inc., we're going to be preparing a balance sheet. We're going to be preparing a statement of cash flows for the year ended December 31st, 2020. So if you have questions on how we go through and do this, I want to encourage you to go look at the other video that just made it, the basic cash flow questions. Okay, so the first thing when we look at a statement of cash flows is that I know what my answer is going to be. My cash started out at $220,000 and it ended at $630,000. So my total increase in cash is going to be $410,000. So my first step when I go through and do this question is I want to prepare the skeleton, or really what is this cash flow going to be ultimately looking like. And when I prepare the skeleton, what I'm doing here is I'm going to say the company name, or Lasers Inc. statement of cash flow for the year ending December 31st, 2020. And my cash and cash equivalents at the very beginning of the period were $220,000. Okay, this is D6. My beginning cash was $220,000. My total cash increased by $410,000. And how did I get this? It's the difference between the $630,000 ending cash minus the $220,000 beginning. And so my ending cash balance is going to be my cash and cash equivalents at the beginning of the period, plus this $410,000, or $630,000. Now, the fun stuff begins here, which is we're going to go through and now fill out the inner parts. So our second step when we are doing a statement of cash flow, when we're asked to prepare a statement of cash flows, is to go through and put all of these accounts into T accounts. For the cash T account, we're going to go through and put in the various different categories: operating, investing, and financing. So for your sanity and for mine, I'm going to pause this video while I go through and do that. Okay, we're back. And what I've done here is I have taken this balance sheet and put it into T accounts. Notice here, accumulated depreciation on the equipment is a contra asset account, therefore it has a credit balance. Please refer to my other videos in terms of how to go through and to do this. And as a quick reminder, when I'm going through and recording transactions and which way they fall on the balance sheet, assets are debits, liabilities and owner's equity generally have credit balances. I increase assets with debits, decrease them with credits. Liabilities and owner's equity are increased with credits and decreased with debits. So going back here to our example, the first thing I went through and did is I created a skeleton, which is right here below. The second thing I went through and did is I put in the opening and ending balances into each one of the T accounts. For cash, what I'm more going to be doing here is I'm going to be breaking this down into operating, investing, and financing. In terms of what goes where, I want to strongly suggest to you to go back and watch the earlier videos where I talk about what transactions go through into each one. So now that we've put the balance sheet into our T accounts here, my next thing I'm going to be doing is I'm going to be dealing with the additional information first. I don't jump ahead and start analyzing the T accounts until I have dealt with the additional information first. The first one right here is it tells me that my net income was $1,050,000. When I go here, and where does net income go? It goes to retained earnings. If you don't understand this, please watch my previous video. That is a simplified cash flow question that will have, the basic cash flow question that talks about what impacts retained earnings. So my net income was $1,050,000. Net income increases retained earnings. And so what do I need to do? Well, over here, I need to put this into my cash T account. So I've got $1,050,000. My rule is I do the opposite to cash, or I'm going to debit cash here for $1,050,000, and I'm going to call this net income because that's what it is. So that's my first piece of additional information. My next one here is cash dividends declared and paid were $400,000. When I'm paying a dividend, I'm going to go over here to retained earnings because remember, dividends decrease my retained earnings. I have a debit here for $400,000. And so when it comes to a dividend, where does it go? Well, again, going back to the earlier discussions, when I'm paying a dividend, this is kind of giving my owners a return on their investment for the most part. So what I'm going to do here is I'm going to do the opposite to cash, but what section do I do it in? Because it relates to the company's stock, I'm going to put it in the financing section. So here I'm going to show a credit to cash of $400,000, and my description is going to be dividends. So that's what I'm doing here. Okay, so I'm dealing with the additional information. I've dealt with this, and I've dealt with this. The next one it tells me here is it says that bonds payable of $500,000 were redeemed for $500,000 cash. And let's take a look at this. So my bonds payable went from $2 million to $1.5 million. What does redemption mean? It's not the Marley redemption song, rather what it is, which is a great song, by the way. Rather what it is I'm buying back my bonds. So here I was more than likely crediting cash, and then if I'm redeeming it, I'm decreasing it. So I'm going to decrease that liability by this $500,000. So my bond payable here has a debit of $500,000. My rule is I always do the opposite to cash. So what I'm going to be doing here is I'm going to be crediting cash for $500,000. And because I'm buying or selling my own bond, it goes in the financing section. And if you're having trouble with knowing what goes where, generally everything related to a company's finances or their own securities is going to be in the financing section. Please refer to my other videos if you're having troubles understanding that part. Okay, so we've dealt with the bond redemption, and again, calling it redemption of bond because that's what it is. And then here I have common stock was issued for $350,000 cash. So my common stock, when I'm issuing a stock, I'm going to be debiting common stock, and I'm going to be crediting additional paid-in capital. So here I'm going to do $350,000. Excuse me. I'm going to be debiting cash, crediting common stock at par, crediting additional paid-in capital common stock. So here I have $350,000. When I'm dealing with my additional information, I want to go through and kind of input in these transactions as though they had an impact on cash. So here, common stock was issued for $350,000 cash. What does that mean? More than likely, cash was debited, additional paid in capital common stock, and common stock at par were credited. So here, I've got $350,000 showing as an increase to my additional paid in capital common stock. What I'm then going to do is I'm going to do the opposite to cash, or here have a debit to cash. I'm going to call this a sale of stock, or you could say an issuance, common stock issuance. Both of those would be fine. Okay, so I've dealt with the bond payable, dealt with the common stock, and now it's telling me that land that cost $250,000 was sold for $200,000 cash. So when I sell land, or when I have any type of an asset sale, I'm going to have here, in this case, I would be debiting cash, crediting land for $250,000. If this was equipment, I would have an amortization question or a depreciation issue, but I don't because it's land. So if I sold land for $250,000, that must mean I'd be debiting cash for $250,000 and crediting land for $250,000. So where does land go? So I have to do essentially the opposite to cash. So where am I going to put this $250,000? When it comes to the purchase or the sale of property, plant, and equipment, including land, that is going to be showing up as an investing activity. So here, this is going to be a sale of land. And this is going to be the opposite to cash, or a debit here of $250,000. And let's go ahead and do this here. So there we go. Okay. So I have now gone through and dealt with all of the additional information. The best way I can tell you to do this is when you're getting here to the bonds redemption, and then the common stock, I would kind of think, well, what's happening to cash? In this case here, I'm debiting cash, crediting common stock. Here, I'm repurchasing my own shares or my own bonds. So I'm going to be crediting cash, debiting bonds payable. So let's now go up here. And so now that we've dealt with the additional information, we're now ready to look at the various different accounts. And again, my overall goal here is I need to get to an overall increase in my cash account of $410,000. So with accounts receivable went from $760,000 to $850,000, or an increase of $90,000. So what do I do with this $90,000? Well, over here, I'm going to do the opposite to cash, or a credit of $90,000. Once I'm over here, then I describe it. I say this is an increase in accounts receivable. My inventory went from $1,890,000 to $1.7 million. What happened here? Well, in this case, to balance my T account, I'm going to need a credit of $190,000. So $1,890,000 minus $190,000 gives me $1.7 million. And so for this one right here, I'm going to do the opposite to cash, or I'm going to debit cash here for $190,000. When I go through and do this, my description is going to match what happened in the T account. So this is going to be a decrease in inventory. And we'll make this just a little bit bigger for right now. There we go. Okay. So I have a decrease in inventory. My land is already balanced. I've already addressed that. Over here, my equipment went from $2 million to $2.7 million. What do I need to do to balance my T account? Well, I need a debit here of $700,000. So what do I do to cash? In this case here, for my cash, what I'm going to do is I'm going to do the opposite to cash. And this here is going to be a credit to cash of $700,000. And what do I call this? I'm going to call this a purchase of equipment. and this here will be for 700,000. And whenever I'm buying or selling property, plant, and equipment, if I'm buying equipment for cash, it goes to the investing section. If I'm selling equipment, the proceeds go into the investing section. Okay, so I've got here accumulated depreciation on equipment. So here I've got 320,000. I ended up at 660,000. So here I need 340,000 to balance the T account. And what I would normally do is I would say, okay, I'm going to follow the same rule. Is over here, I'm going to do the opposite to cash. Okay, and this is where students make a lot of mistakes. And the mistake they make is they'll say that, oh, this is an increase in accumulated depreciation equipment. No, it's not. What causes this increase is going to be the way I record depreciation expense is I'm going to debit depreciation expense for 340. I would be crediting accumulated depreciation here. So when I'm using the description for accumulated depreciation on equipment, I'm going to be using the description of how it was generated. I'm going to follow this same rule for accumulated amortization or for the allowance for doubtful accounts, which would be amortization expense and bad debt expense respectively. So that's what I do here. Now remember, again, I don't call it an increase in accumulated depreciation on the equipment. I'm going to call it what it is, which is the depreciation expense. For accounts payable, I went from 470 to 390. So here, to balance my T account, I need a debit of 80,000. What's my rule? I do the opposite to cash, or I'm going to credit cash here for 80,000, and hopefully we can find another highlight color to use. Oh, there we go. A little offline green. Perfect. Okay. And so what is happening here with payables? Well, if I'm debiting accounts payable, right? Remember, because accounts payable typically has a credit balance. If I'm debiting accounts payable, this is going to be called a decrease in accounts payable, right over here for the 80,000. So what I now do is I take a look at the rest of my T accounts. For bonds payable, I had an opening of 2 million, credit here of 500, and then, oops, I totally screwed this up. This should just be 400,000, and this should be 500,000. I was jumping ahead. Okay. So here I have a credit for 500. I've dealt with this. Over here is a debit. No change to common stock par, additional paid in capital common stock, credit to debit over here in cash, and then I have retained earnings, my dividend here shows up as a credit in the financing activities section. So my magic number is 410,000. So when I add up all of these different balances, it needs to equal to 410,000. So here in my operating section, on $1,580,000 of debits, 170,000 credits. So my total cash provided by operating is going to be $1,580,000 minus 170,000, or 1,410,000. For investing activities, I had two things happening here. And I had here 250 of a debit from my sale of land, plus my purchase of equipment for 700,000. So this is going to be my total cash used in or 700,000 minus 250, or 450,000. Remember, if my credits outweigh my debits in the particular section, it's going to be used in, not provided by. So if the cash is a debit, For the section, it's going to be provided by. If it's a credit, it will be used in. Lastly, here for financing, I had here debits of 350, credits of 900,000. And let me kind of move these guys down here. Let's move these guys over here. Sorry, additional information. Just need to make a little more room. There we go. Okay. So right over here. So my total cash here used in financing activities is going to be 550,000. When I add up the three amounts, or cash provided by operating activities of $1,410,000, my cash used in investing activities of $450,000, and my cash used in financing activities of $550,000, what I'm going to be ending up with here is a total of what? It should hopefully be my ending cash balance, or excuse me, my change in cash. I've got 1,410,000. So my increase in cash is going to be 410,000. Okay, that was a lot. So let's go back here and kind of quickly review what we did. The first thing we had to go through and do is input in. So the first step is we made the skeleton, which is down here below, and we're going to get back to that in a second. But in the skeleton, we're just kind of inputting in the beginning cash balance, etc. The next thing I had to go through and do is I had to put in the beginning and ending balances into my T accounts. Then I dealt with the additional information. I put in the additional information into the T accounts. Then after I deal with the additional information, I go through and post everything into the cash account. Now remember, pretty much anything that's financing related, if I'm paying a dividend, if I'm buying or selling a bond, or if I'm buying or repurchasing shares, goes into financing. Anything I'm doing with related to buying or selling equipment, marketable securities, or land goes into investing. And then I've got everything else is pretty much thrown into operating. So once I put everything into the T accounts, I'm going to give a total here for each area. And that's what I just did right over here. As I total up each one, total debits, total credits. If the amount was a total debit, it's going to be total cash provided by operating. If the total cash was a credit, it would be total cash used in investing. If it's over here, if it's a credit, again, it's going to be used in. So I added up those three areas, the 1,410,000, which is coming from operating, investing, financing, and my total change in cash was 410,000. You do not, at least on my exams, you do not need to show me this amount of detail. However, it's important that we're going through and doing this for this particular example. So let's take a look at what our statement of cash flows looks like and how we prepare it. Okay, now we're back. And this was the skeleton that I initially went through and prepared at the very beginning of the question. And note here for my skeleton, all I did was I put in my beginning cash and cash equivalents. I put in my total change in cash and got to my ending amount. So right here, when I start going through and doing this, now I'm going to flesh this out. So for my operating activities, I'm going to have my net income. My net income here was $1,050,000. And remember, if this amount on the cash is a debit, I show it here as a positive amount. So here for my adjustments, I'm going to need a little bit more space. So let's see, I got 1, 2, 3, 4, 1, 2, 3. Let's move this down a little bit. Okay. So again, if I've taken the time to write my descriptions, this should be relatively easy to do. Okay. And so here, my increase in accounts receivable is going to be 90,000. My decrease in inventory is going to be a positive 190 because it's a debit. My depreciation expense is going to be 340,000. And why we are adding back the depreciation expense is because when we think about it, does depreciation have any impact on cash? And the answer is no, because when we do this journal entry, we're essentially allocating the cost of a prior purchase. So when it comes to handling the depreciation expense, this is going to be an add back to our net income because it has no impact on cash. And then here, I'm going to have a decrease in accounts payable of negative 80,000. And here, my net cash, or my net cash provided by operating activities is going to be $1,410,000. So now I get to my investing activities. I had here the sale of land. I had here the purchase of equipment. So the sale of land is going to be a debit because it's positive. My sale of equipment will be a negative. So my net cash used in investing activities is going to be 450,000. Notice I use total. This should really be net. Okay. And we'll do this one down here. I'm learning too, everybody. We're all learning together. It's so much fun. Okay, so now when I get to my financing activities, I think I'm going to need a little bit more room here, so we'll kind of scoop these guys up. Thank you, Google Sheets. There we go. Google Sheets, great to use in classrooms. The students love them or are tortured by them. And so right over here. So my dividends, because it has a credit balance, will be showing a negative amount. My bond redemption, because it's a credit, will be shown as a negative. And my sale of stock right here is going to be 350. So this is going to be my net cash used in financing activities. And this is going to be a total of 550,000. When I add up the 1,410,000 plus the 450 plus the 550, that's what I get. Lastly, I have no non-cash transactions, and we'll talk about that on the next one. And so there we go. If you've done your T account here, this essentially is giving you the statement of cash flows. And so again, hope this video was helpful, and please remember to like and subscribe, and I will see you in the next cash flow video. Have a great one.